Hey everyone, Yes Bank is a script that fits the bill for a super hit Hollywood movie. It includes money, fights, dispute, tragic death, illegal activities, and of course, the rise and the fall. But of late, Yes Bank is again in news. Thankfully, this time it is in news with positive development. Now, I have received multiple requests to create a video on Yes Bank. So I thought of covering the recent development and sharing my viewpoint on the bank. Although there are a lot of new investors that have started investing since the Yes Bank crisis. Hence, I thought of giving a quick recap of past history of Yes Bank to help you understand what went wrong with Yes Bank. And then I have covered the latest development. Finally, I have provided my viewpoint on bank's future and if it is worth investing in Yes Bank or not. But remember, this is not a stock tip. This video is only for educational purpose. Alright, let's get started. Yes Bank started its journey in 1999 when three successful bankers joined hands to form an NBFC. It included Ashok Kapoor, the former country head of ABN AMRO Bank, Harkirat Singh, the former country head of Deutsche Bank, and third partner Rana Kapoor, former corporate finance head of ANZ Grindlays Bank. Eventually, Yes Bank received the banking license from RBI in 2003 along with Kotak Mahindra Bank. In the same year, Harkirat Singh quit the bank on conflict over the vision for Yes Bank. Then Mr. Ashok Kapoor became the chairman and Rana Kapoor became the MD and CEO. During this journey, Ashok Kapoor's wife Madhu Kapoor's sister Bindu Kapoor got married to Rana Kapoor. So both Ashok Kapoor and Rana Kapoor became co-brothers. And Yes Bank started making slow and steady progress in the initial years. However, it received a big shock in 2008. Mr. Ashok Kapoor died in the Mumbai terrorist attack. Now, Yes Bank was left with only one leader, Mr. Rana Kapoor, and he was an ambitious man. He wanted to make Yes Bank the #1 private bank in India. Now, after the demise of Ashok Kapoor, his wife Madhu Kapoor wanted her daughter in the board of Yes Bank. But Rana Kapoor took the complete charge of Yes Bank and Madhu Kapoor's daughter was denied board seat. Mind you, Madhu Kapoor was still the second largest shareholder in the bank after Rana Kapoor. So things got into legal battle. In the meanwhile, Yes Bank started growing quickly under the leadership of Rana Kapoor. Yes Bank started aggressive lending with a dream to grow quickly. It even invested heavily in digital banking and looked like the poster boy of Indian private banking system. It looked like nothing could go wrong with Yes Bank. As the name itself said, yes. But in this process, to grow super fast, Yes Bank ended up giving loans to corporates whom other established banks denied giving loans. And that was the of bad loan books for Yes Bank. Then in 2015, the first doubts began to be aired publicly about Yes Bank loan portfolio. UBS published a report suggesting that Yes Bank has lent around 125% of its net worth to stressed companies. However, Yes Bank filed a complaint with SEBI about the report and requested it to do an investigation on UBS. During this journey, Yes Bank share price zoomed from levels of Rs 12 in 2005 to highs of Rs 400 in 2018. However, after the reports from UBS, RBI started an asset quality review on Yes Bank books. And that cracked down everything. Yes Bank's loan book included exposure in groups like Anil Ambani Reliance, the SL Group, DHFL, ILNFS, Jet Airways, Cox & Kings, Vodafone that were all under stress. And RBI found that Yes Bank's NPA for FY17 were closer to 8,000 crore rupees, whereas bank only declared NPA worth 2,000 crore rupees. Eventually, in August 2018, Yes Bank share price started falling and tanked nearly 60% over the next 4 months. Then RBI finally got tough and said that Rana Kapoor would have to step down as MD by January 2019. RBI in its report pointed several lapses and regulatory breaches in the bank's functioning and mentioned that selective disclosure by the bank was a deliberate attempt to mislead. Eventually, Yes Bank appointed Ravneet Gill as CEO on 1st March 2019 and bank reported a loss of over 1500 crore in Q4 of FY19. Meanwhile, Macquarie double downgraded Yes Bank and stock tanked 30% the next day. The provisioning kept on mounting and Yes Bank reported a total loss of 16,418 crore in FY20 with a total bad loan worth over 50,000 crore rupees. Bank even failed to raise capital during this period. Hence, RBI decided to put moratorium on Yes Bank and depositors were not allowed to withdraw more than 50,000 rupee. RBI asked SBI to form a consortium of banks to invest in Yes Bank. And the share price of Yes Bank tanked nearly 97% from the peak of 400 rupee to levels of rupees 12. And the existing shareholders were not allowed to sell 75% of their holdings for the next 3 years. Eventually, SBI along with LIC and top private banks infused 11,000 crore rupees into Yes Bank along with private sector lenders including Kotak, SDFC, Axis, ICICI Bank, and they also invested in Yes Bank at rupees 10 per share. And Prashant Kumar was made Yes Bank's new MD and CEO along with 2 directors appointed by the RBI. So this was the story of Yes Bank rise and fall. The stock that was one of the darling of every investor saw a terrible fall. Now let us look at what happened next. After the appointment of Prashant Kumar as CEO, Yes Bank started to rebuild its trust and grow its business. Of course, it was not a cakewalk to do that. For almost 2 years, Yes Bank share price traded at levels of rupees 12. However, recently there were some positive development that resulted in jump in Yes Bank share price by over 30% in last 1 month. So last month there was one major news from Yes Bank where it declared a sale of bad loans worth 48,000 crore rupees for 11,500 crore. Yes Bank said that it has signed a binding agreement with JC Flowers for a strategic partnership in the sale of 48,000 crore worth of stressed loans. And rupees 11,500 crore would be the base bid, and it has invited other institutions to bid for better rates. And a few days ago, Yes Bank announced the fundraise worth 8,900 crore from 2 global private equity players, Carlyle and Advent International, with each investor potentially acquiring up to 10% stake in the lender. After this fundraise news was announced, Yes Bank CEO Prashant Kumar said that rupees 9,000 crore is meeting our growth requirement for medium to long term. There are a couple of things. One would be in terms of growth requirement for medium to long term. Second, this is also a confidence capital. A confidence capital to the stakeholders like the bank would be able to grow, and the capital is not a constraint. There are also speculation that Aditya Puri might join Yes Bank board. So these are all positive changes. Moreover, Yes Bank recently declared its quarterly result and it has shown a good progress since the new restructuring. In the latest Q1 result, its net interest income stood at 1,850 crore, which is up 32% year on year. Its total income stood at 2,632 crore, which is up 16% year on year. Although its operating profit stood at 590 crore, which is reduced by 20% year on year. However, its asset quality has improved and its provisioning stood at 175 crore, which is reduced by 62%. And its net profit stood at 311 crore, which is up 50% year on year. Its net NPA stood at 4.2%, which is improved from 5.8% in last quarter. Its advances have grown by 14% year on year and its deposits have grown by 18% year on year. Its CASA ratio stood at 30.8%. Bank has opened 12 new branches and total branch count stood at 812. Although its return on asset is still on the lower side at 0.4% and return on equity is 3.7%. Bank's capital adequacy ratio stood at comfortable levels of 17.7%. Due to all these positive developments, Yes Bank share price jumped. At current levels, Yes Bank is trading at levels of 16-17 and has a PE ratio of 36 and a PB ratio of around 1.27. So price to book value is looking decent. Now the biggest question is it the end of bad phase for Yes Bank? Is Yes Bank set for a big rally? Can it be a multi-bagger from current levels? Well, to be really honest, generally the retail investors get overexcited with one good news and it just takes one bad news to shatter the confidence of retail investors. And retail investors have a high interest in shares with low price. Like shares below rupees 50 or shares below rupees 100. They think that if they have rupees 1000 to invest, they will get only one share of ICICI Bank, whereas they can get nearly 60 shares of Yes Bank. So more units equal to more profits. That's one of the biggest myth and one of the biggest reason why retail investors lose money in stock market. They invest in penny stock with a dream to generate multi-bagger returns and 99% people lose money in those penny stocks. Another common myth is that a share at rupees 10 has high probability to become rupees 50 and generate 5x return as compared to a share at rupees 1000 to become 5000, and hence retail investors always prefer a share worth rupees 10 over a share worth rupees 1000. They don't have any knowledge about valuation, future growth, fundamentals, nothing. Especially they don't understand the risk aspect of investment. They only look at the return potential. And I personally met many people, including my relatives, friends, who asked my view on Yes Bank and they are holding Yes Bank in huge quantities. They don't want ICICI Bank or HDFC Bank. They want low ticket stocks like Yes Bank, Vodafone Idea, etc. Recently, there was an interesting chart shown by Nitin Kamath of Zerodha that shows that as the share price of Zomato fell down, the numbers of retail investors increased drastically. People basically have an anchor bias. For example, in case of Yes Bank, people think that Yes Bank once touched a high of rupees 400 and compared to that, it is available at only rupees 16-17. So if Yes Bank recovered and touched those highs again, it will generate 25 to 30 times return. Wow, that's a big dream. I wish it comes true. However, the reality is that there is still a long way for Yes Bank from current levels. Although the way things have turned positive, I believe that there is limited downward risk for Yes Bank, so you can still consider investing a small amount of your money, but do not think that it will become a multi-bagger overnight. Which basically means don't get too greedy with Yes Bank. Make sure that you invest in quality banks like ICICI, HDFC, or even banks like Federal Bank, IDFC First. And if you want to take a chance and think that Yes Bank can be a turnaround story, then invest a small part of your money. Don't make Yes Bank the largest shareholding in your portfolio. And remember, there is still a lock-in of 3 years for Yes Bank investors who had invested before the restructuring, and that will get over next year. And many of them would want to exit from Yes Bank. So it can see a huge selling pressure by next year. Hence, invest cautiously. See, the entire idea behind this video is to help you understand what went wrong with Yes Bank and where it stands today. And more importantly, make you realize that don't get overexcited with Yes Bank. There is still a long way to go and it won't become a multi-bagger within a short span of time. That's my personal feeling. I might be wrong. Still, I would say that invest sensibly. There are a lot of great banking stocks out there. Make sure that you take a balanced approach. Like I said, the downward risk for Yes Bank looks limited, but still it is not out of woods yet. But considering the fact that banking system is looking in good shape in India, I expect Yes Bank to post good set of numbers in the coming quarter. So if you are tempted to buy Yes Bank, then invest only a small part of your money. And if you are an existing shareholder in Yes Bank, then you can consider holding your investment. That's it from my side. I've tried to give my honest opinion about Yes Bank. Although I personally wish that Yes Bank regain its lost glory over the next few years, as I know that a lot of retail investors' money is stuck in Yes Bank. But it is important to be a realist and do not have over expectation. Thank you for watching this video. Take care.